Good day, and welcome to the Daqo New Energy second quarter 2021 results call. All participants will be in a listen-only mode. Should you need assistance, please signal a conference specialist by pressing star then zero. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star then one on a touch-tone phone. To withdraw your question, please press star then two. Please note this event is being recorded. I would now like to turn the conference over to Kevin He. Please go ahead.
Hello, everyone. This is Kevin He, the Investor Relations of Daqo New Energy. Thank you for joining our conference call today. Daqo New Energy just issued its financial results for the second quarter of 2021, which can be found on our website at www.dqsolar.com. To facilitate today's conference call, we have also prepared a PPT presentation for your reference. Today, attending the conference call, we have Mr. Longgen Zhang, our Chief Executive Officer, and Mr. Ming Yan, our Chief Financial Officer. The call today will feature an update from Mr. Zhang on market and operations, and then Mr. Yang will discuss the company's financial performance for the quarter. After that, we will open the floor to Q&A from the audience. Before we begin the formal remarks, I would like to remind you that certain statements on today's call, including expected future operational and financial performance and industry growth, are forward-looking statements that are made under the safe harbor provisions of the U.S. Private Securities Litigation Reform Act of 1995. These statements involve inherent risks and uncertainties. A number of factors could cause actual results to differ materially from those contained in any forward-looking statement. Further information regarding these and other risks is included in the reports or documents we have filed with or furnished to the Securities and Exchange Commission. These statements only reflect our current and preliminary views as of today and may be subject to change. Our ability to achieve these projections is subject to risks and uncertainties. All information provided in today's call is as of today, and we undertake no duty to update such information except as required under applicable law. Also, during the call, we will occasionally reference monetary amounts in U.S. dollar terms. Please keep in mind that our functional currency is Chinese RMB. We offer these translations into U.S. dollars solely for the convenience of the audience. Without further ado, I now turn the call over to our CEO, Mr. Zhang. Please go ahead.
Thank you, Kevin. Hello, everyone. Thank you for joining our conference call today. We are very excited to report an excellent quarter with strong revenue growth and a better than expected profitability, as the company achieved record high production volume, gross profit, and net income. With the global focus on addressing the climate challenge with plans to reach carbon neutrality, market conditions remain strong for the polysilicon sector. The strong increase in downstream demand has led to a shortage of polysilicon and the cost of polysilicon ASP to rise significantly from $11.9 per kg in Q1 to $20.81 per kg in Q2. In July and August, the market price for mono-grade polysilicon has remained at approximately $26 to $28 per kg, and we expect the strong price momentum to continue into the second half of this year. Despite the rise in solar module prices in the first half of this year, we continue to see stronger than expected market demand, even at the new market prices. Recently, the solar value chain has been stable at the new market prices, and downstream manufacturers are currently able to pass through price increases to their customers. During the week of August 9, major solar wafer and solar cell manufacturers in China announced the price increases for solar wafers and cells, further demonstrating the strong end market demand. We saw the uptick in polysilicon pricing in the last 2 weeks, with a surge in orders from our diverse customer base. We expect the the constrained polysilicon supply to be the main limiting factor to the size of the global solar market this year. Polysilicon production is a complex chemical process and has the highest barrier to entry in the solar value chain. Based on our research, we expect to see approximately 180 to 220,000 metric tons of additional polysilicon supply in 2022, considering a potential 6-month ramp-up period for other polysilicon producers. This total global polysilicon supply can be used to produce approximately 240 to 250 gigawatts of solar modules, which can support approximately 200 to 210 gigawatts of solar installations in 2022. So the polysilicon sector will still be the one with most constrained supply across the main solar PV manufacturing value chain in 2022. On the demand side, more and more countries have set up timetables for peak carbon and carbon neutrality targets that will significantly increase demand for renewable energies, including solar PV. In addition, there is still meaningful room for potential cost reduction across the value chain, which will effectively stimulate large demand, especially given that solar PV has already reached grid parity in many countries and regions in the world. As a result, we believe polysilicon pricing will remain healthy in 2022, making our sector one of the most attractive sectors in the solar PV industries in the long run, given its high entry barrier and operational complexity. On the policy front, during the Politburo Central Committee meeting on July 30 regarding economic activities in the second half of 2021, with China's President Mr. Xi Jinping presiding over the meeting, the central government reiterated the urgency for national coordination on carbon peak and carbon neutrality goals, and the development of the peak carbon 2030 action plans and related policies as early as possible. In addition, China recently announced an ambitious program to massively deploy distributed generation solar projects at the local government level, that is the county level. We believe solar will continue to be a strong beneficiary of the government policies and support. With regard to our ESG initiatives, we are in the process of incorporating environmental, social, and governance factors in all of our major business decisions, and we published our inaugural ESG sustainability report in July. We are already making substantial progress on the sustainability front, including installing a new wastewater treatment facilities in 2018 that reduced our wastewater discharge density by 60% in 2020 compared to 2018. Furthermore, by increasing energy efficiency and energy recycling as well as optimizing our production process, we reduced our comprehensive energy consumption density by 40% in 2020 compared to 2017. We will continue to work on our ESG efforts, including planning for greater renewable energy use as part of our energy sources in the future. We continue to focus on initiatives to strengthen the company's long-term competitiveness. Our major operational subsidiary, Xinjiang Daqo New Energy, successfully completed its IPO listing on China's A-share market and started trading on Shanghai Stock Exchange Sci-Tech Innovation Board. The ticket code is 688 303 on July 22nd, 2021. The total gross proceeds of the IPO are approximately 6.45 billion RMB, which were funded Xinjiang Daqo's polysilicon expansion project and provide additional capital for our future growth plans. Following the Xinjiang Daqo's IPO, Daqo New Energy directly hold approximately 79.6% of Xinjiang Daqo's share and indirectly hold 1.1% of Xinjiang Daqo's shares through Daqo New Energy's wholly owned subsidiary, Chongqing Daqo, for a total ownership of 80.7% of the A-share listed subsidiaries. There is no variable interest entity, VIE, structure between Daqo New Energy and Xinjiang Daqo. The successful IPO will offer us an additional value to access the attractive capital markets in China for future growth and expansion. With our advantages of competitive cost structure, quality, and technology advancement, outstanding operational expertise, and experienced management team, we have set up a roadmap to increase our capacity to 720,000 metric tons by the end of 2024, representing an approximately 50% annual average growth rate of our production capacity over the next 3 years to better serve the fast-growing global solar PV market. Now, I will discuss outlook guidance for the company for this year. The company produced 41,287 metric tons of polysilicon and sold approximately 42,531 metric tons of polysilicon in first half of this year, representing full utilization level of the company's production facilities. For the second half of this year, the company expects to remain the full utilization with sales volume similar to production volume. For the full year of 2021, the company raises its production guidance from the previous level of 81,000 to 83,000 metric tons to the level of approximately 83,000 to 85,000 metric tons of polysilicon for the full year, inclusive of the impact of the company's annual facility maintenance. Now, I will turn the call over to our CFO, Mr. Yang, who will discuss the company's financial performance for the quarter. Thank you.
Thank you, Longgen, and good day, everyone. Thank you for joining our conference call today. Now I will discuss our financial performance for the second quarter of 2021. We are pleased to report very strong financial performance for the second quarter with strong revenue growth and record profitability. Revenues were 441.4 million compared to 256 million in the first quarter of 2021 and 133.5 million in the second quarter of 2020. With strong market demand for our products, ASP was $20.81 per kilogram in Q2 2021 compared to $11.90 per kilogram in the first quarter. As Longgen mentioned, for the months of July and August, the market price for mono-grade polysilicon has further increased to approximately $26 to $28 per kilogram, and we expect the strong price momentum to continue into the second half of this year. Gross profit was 303.2 million compared to 118.9 million in the first quarter of 2021 and 22.7 million in the second quarter of 2020. Gross margin was 68.7% compared to 46.4% in the first quarter of 2021 and 17% in the second quarter of 2020. The increase in gross margin was primarily due to higher average selling prices. Selling, general, and administrative expenses were 9.3 million compared to 9 million in the first quarter of 2021 and 10.1 million in the second quarter of 2020. SG&A expenses during the quarter include $2.4 million in non-cash share-based compensation costs related to the company share incentive plan, and compared to $3 million in the first quarter of 2021 and $4.5 million in the second quarter of 2020. Research and development expenses were $2.1 million compared to $1.2 million in the first quarter of 2021 and $2 million in the second quarter of 2020. Research and development expenses vary from period to period and reflect R&D activities that take place during the quarter. As a result of the foregoing, income from operations was $292.4 million compared to $109.2 million in the first quarter of 2021 and $10.8 million in the second quarter of 2020. Operating margin was 66.3% compared to 42.6% in the first quarter of 2021 and 8.1% in the second quarter of 2020. Interest expense was $7.2 million compared to $7.8 million in the first quarter of 2021 and $6.7 million in the second quarter of 2020. Net income attributable to Daqo New Energy Corp shareholders was $232.1 million compared to $83.2 million in the first quarter of 2020 and $2.4 million in the second quarter of 2020. Earnings per basic ADS was $3.15 compared to $1.13 in the first quarter of 2020 and 3 cents in the second quarter of 2020. EBITDA was $311.7 million compared to $128.1 million in the first quarter of 2021 and $26.8 million in the second quarter of 2020. EBITDA margin was 70.6% compared to 50% in the first quarter of 2021 and 20% in the second quarter of 2020. As of June 30th, 2021, the company had $269.7 million in cash and cash equivalents and restricted cash, compared to $227.8 million as of March 31st, 2021, and $115.8 million as of June 30th, 2020. As of June 30th, 2021, notes receivable balance was $97 million, compared to $38.5 as of March 31st, 2021, and $8.2 million as of June 30th, 2020. With the company's strong earnings and operating cash flow, we took the opportunity to further reduce our interest-bearing debt balance during the quarter. As of June 30th, 2021, total bank borrowings were $156.6 million, of which $70.9 million were long-term bank borrowings, compared to total bank borrowings of $222.2 million, including $100.4 million of long-term bank borrowings as of March 31st, 2021, and total bank borrowings of $264.8 million, including $116.9 million long-term bank borrowings as of June 30th, 2020. With our strong cash balance and cash generation for this year, we expect that we would pay off all of our interest-bearing bank borrowings before the end of the year. For the first half of 2021, net cash provided by operating activities was $442.3 million, compared to $47 million in the same period of 2020. And for the 6 months ended June 30th, 2021, net cash used in investing activities was $255 million, compared to $60 million in the same period of 2020. The net cash used in investing activities in 2021 and 2020 was primarily related to the capital expenditures on the company's polysilicon expansion projects. For the first half of 2021, despite the strong increase in capital expenditures related to our polysilicon expansion, the company generated $186 million of free cash flow. For the 6 months ended June 30th, 2021, net cash used in financing activities was $37 million, compared to net cash provided by financing activities of $16 million in the same period of 2020. The net cash used in financing activities in 2021 was primarily related to the repayment of bank loans. And that concludes our prepared remarks. Operator, we will now open the floor to questions from the audience.
Thank you. We will now begin the question and answer session. To ask a question, press star then 1 on a touch-tone phone. If you are using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star, then 2. And the first question comes from Phil Shen with Roth Capital Partners. Please go ahead.
Hi, everyone. Thank you for taking my questions. You mentioned, Longgen, that the outlook for poly pricing remains healthy in 2022. Was wondering if you could talk through how you expect your pricing to trend in Q3 and 4, and then also in 2022. Thanks.
Okay. Basically, by the end of this year, we see didn't have any capacity or adding any new poly supply into the pipeline. So we see right now, I think the current price, okay, around the average price around like $26 to $28 per kg is well transferred to right now to ending the module price. Right now selling around 175 to even high 1.9. No, I'm sorry, 1.9 renminbi per watt right now, from 1.75 to 1.99 renminbi per watt. So we see right now, I think the poly supply is very tight, basically right now. So as we mentioned that for next year, we see from now on to end of this year, I think the price will continue. I think we stay the high in the second half of the year. The reason is because I think the module price is higher than the expected, with the demonstrating stronger than expected demand. Also, reason the price increase in cell and wafer sector also shows that the demand is very strong. I think in 2022, based on our industry research, we expect to see, I think, approximately 180 to 280,000 metric tons of additional polysilicon supply, in which can be used to produce approximately 240 to 250 gigawatts of solar module. We think the overall cost reduction will contribution around 5 to 10 renminbi cents per watt, and bring down the module price to maybe $1.65 renminbi per watt. So if the power price continue to go down, let's say to 22 to 23 per kg, the module price can be further lower to 1.55 per watt. So basically, you can continue calculation on the module. So we believe, I think next year, first half next year, the average ASP of the polysilicon, we think is around 150 renminbi per kg. For the second half of the year, we think it should be around like 130. I'm just around, okay. You can range for the 10%. So 130 renminbi per kg. So I think for next year, as you see that our 4B capacity will put into production by the end of this year. So next year, we think our production will get a 50% increase. So the bottom line can get growth. Philip.
Great. Thank you, Longgen. That's really helpful. And then from the cost side, we've seen your costs increase a little bit, not much, but just a little bit. What's the outlook for your cost structure on cash cost structure this year and Q3 and 4, and then also for 2022?
Okay, if you look at Q2, the cash cost is around $5.41 compared to Q1, $5.37. The cost of goods sold is $6.31 compared to Q1 is $6.29. The all cost, plus everything together, I think is $7.30 compared to Q1 $7.15. So yes, I think we slightly increase. The reason is because I think when the sales price ASP go up, the value adding tax also go up. So that's adding to the operation expenses. So basically, I think from now on, especially in Q3, we see the polysilicon the powder, the silicon powder prices go up. So, I think for Q3 and Q4, our cost maybe continue to slightly, keep, I think the maybe same, maybe slightly, I think, little up, 1%, because of the polysilicon metal powder price jump a lot. Especially this week, I think right now the prices almost go to, I think, 20,000 renminbi per ton. But for next year, definitely because, with additional 4B finished, the scalability of the production, the production line, then plus, the total, I think, the output, the scale, we think we still have like, 2 to 5% the cost, the cutting in the future, in the next year.
Great. Okay, thanks. Congratulations on your successful IPO in China. Wanted to get your view on your thoughts on the U.S. ADR. Some investors are asking, under what conditions would you consider taking the U.S. shares private, given the cash that you're generating through this cycle, and also future capital raises, you'll probably use the A-share entity. So, your stock has performed well in China, while the New York Stock Exchange shares have trended lower. So, under what conditions would you also consider a buyback or a dividend? So, just curious on how you're thinking about the U.S. ADR. Thanks.
It's a good question. Actually, also it's a factor. Our share price right now in the U.S. market is here with honor value compared to A-share. Basically, based on your calculation right now, Daqo New Energy listing in U.S. holds a total ownership of 80.7% of the A-share listed subsidiaries. Right now, almost discounted more than 80% on the price, right? So there is also Daqo New Energy is not the VIE structure between Daqo New Energy and Xinjiang Daqo. So Xinjiang Daqo right now is Daqo New Energy's shareholding on Xinjiang Daqo can be traded 3 years in A-shares market after Xinjiang Daqo IPO, which is I think July 22nd, 2024. That means we can selling shares. I think I think to pay back the U.S. shareholders. That's mean from 3 years from now on, okay, from the IPO. Xinjiang Daqo also has made a commitment letter to its shareholders that it will pay cash dividends in the next 3 years, no less than 30% of its distributable profit during the 3 years period. In China, A-share is averaging 10% of annual profit as a baseline. Okay, so we think Xinjiang Daqo's plan needs to be also be approved by its shareholders meeting and announced together with its 2021 annual report, usually in the middle of April 2022. So as the 80% shareholder of Xinjiang Daqo, we are expect to receive cash dividends as a financial sources for potential buyback or even dividends distributed in the U.S. market. Of course, for the further developing expansion, we can continue to raise money in the A-share at a high value valuation. So we needed to all these I think information. I just also want to remind you that we cannot guarantee the dividend plan of Xinjiang Daqo because it needs to be approved by Xinjiang Daqo's shareholders. So basically, yes, we have some channel to arbitrate in the future, but definitely I think we are not the arbitrator player. We are the manufacturer. We are I think the manager company, and make all efforts to reward our shareholders of both A-share and the U.S. shareholders. Thank you, Sir.
Thank you very much for the detail. One last question: if the Xinjiang board, Daqo board approves the dividend plan, how difficult is it to get the cash out of China to pay the U.S. shareholders? Is it no problem, or do you think there might be challenges to get the cash out?
It's no problem because you see, when we listing in the A shares, you see the China, I think what I call China SEC called
CSRC.
CSRC. It's already approved. The Daqo New Energy is the foreign holders as the shareholders. So when we declare dividends, basically we have to basically it's easy to exchange to the US dollar, but we just pay the dividend tax. So if we set a middle company, Hong Kong, we just pay 10%. If we directly pay the Cayman company, we have to pay 10% dividend tax. So with that money, we can do either buyback or just continue to distribute our dividend to the U.S. shareholders.
Great. Really appreciate the color. Thank you again, Longgen, and I'll pass it on.
Great.
Thank you.
Thanks, Phil.
The next question comes from Gary Zhao with Credit Suisse. Please go ahead.
Hey, hello. This is Gary from Credit Suisse, and firstly, congratulations on the very strong second quarter results. And I have three quick questions. So first one is actually to follow up with the earlier question on the kind of plans for the U.S. listing platform. So just wondering, as you also mentioned that currently there's huge kind of valuation gap between the A share and the U.S. ADR. So it seems like a kind of a big kind of arbitrage opportunity here. So just wondering, would the company or the kind of controlling shareholder been thinking of kind of use some kind of like bridge loans or other kind of financing vehicles, so that it is actually if you kind of privatize the U.S. ADR, you actually get to a much higher kind of valuation A share stake. So just wondering if it's kind of a possible option the company would think of. Thank you.
Okay, Gary, I think first of all, from now on, because you see, to my knowledge, to the board, to the also the controller, shareholder controllers, from I think at least the short term, we're not interested in privatization. We know there is a lot of opportunities to do the arbitrage. It's easier to privatization U.S. shares than transfer to I think the A shares. It's not our purpose, because we think right now the company is on the, I think the up tick side. We want the U.S. shareholders to enjoy the returns. So that's why our strategy is continue to raise capital in the A share market, continue to expansion our future capacity. In the next 3 years, by average 50% every year, continue increase to guarantee or to make sure our bottom line can continue at 20-25% increase to maintain the market value, to reward I think the shareholders. In the meantime, I think what we do is continue to distribute I think the dividends to maximize use the Chinese law. I think as you can see, at least 30% of the distributable profit can be distributed. So I think we will do that. I think declare the dividends and exchange the foreign U.S. currency to the Cayman company, and either to buy back or continue to declare the dividend to the U.S. shareholders. Ming, do you have any comments or questions? Gary. Thank you.
Okay. Thank you. Thank you. This is very helpful. And my second question is on the expansion plan. So earlier you mentioned that by 2024 you target to achieve 270,000 polysilicon capacity. Just wondering if you have a more kind of a specific timeline for this expansion. And secondly, given that your current kind of very strong finance kind of a cash position and also the further the kind of a proceed and already get the proceed from the Asia IPO. So is that possible? The expansion target can be even kind of raised higher if the solar demand continue to beat.
I think first of all, if you look at our balance sheet, by the end of the July 30th, I think the balance sheet is very strong, and I think with the we want to maintain, I think the market share, continue to maintain the market share. Definitely, yes, we want to expansion. First of all, with successful, I think IPO, we can be, I think the 4B nameplate is 35,000 metric tons. We were starting, I think, trial production by the end of this year. Next year, we're full capacity running. So we think that will add maybe 40,000 to 50,000 metric tons for the next year. But the detailed figures we will do, I think, later, certain point in time of later of this year. Then for the year after that, just I mentioned that in order to keep the market share, we see the whole market, the solar market, continue to at least the average, I think, compound growth at 20%. So with the Asia market, I think, capital access possible with, the company inside generation, the cash, with our strong management team, I think, we have the ability to maintain the market share, continue to, from right now to, I think, around 20%, So we planning to looking for, besides Xinjiang, another place, production base, I think it's possible, Yunnan province, Qinghai province, Inner Mongolia, or even, Shanxi. It's another place we can continue expansion around the 200,000 tons. So we were divided into the two phases. The first phase is 100,000 tons, which I think, the semiconductor, I think the production line is 150, I think is 1,500 metric tons. So that's, I think, we are planning. We are right now looking. As soon as we finalize the, I think, finalize the place, we will announce that. Thank you.
Okay.
Gary.
Okay, yeah, thank you. Yeah, so my last question is, so I know it might be too early to tell, but just wondering if management can share with us your view for the kind of a longer term polysilicon price outlook. So for example, by 2023, so when there may be more polysilicon capacity to be commissioned. So when do you where do you think the kind of a more sustainable polysilicon price can achieve? Thank you.
I think I just, answered Philip's question about, the SP of this year and next year. So yes, for 2023, 2024, really we have to considering the demand and the supply. From supply side, we continue to see, I think, China, a lot of, I think, existing player continue to expansion, plus some new, I think, comer. But you have to consider that as the technology continue to improve, maybe I think, in the next generation is from P to change the P, silicon cell, P cell to change to N cell. That's asking for high quality. So who can produce N-type polysilicon? That's most important, the market share. You can continue to have the market share. Second, we just mentioned that this is a CMC. It's a chemical manufacturing control. It's not easy for newcomer, even let's say existing player, New Hopes. Today, the monosilicon, I think, the structure percentage only, I think, around 50%. We can reach almost 99.5%. So I think the quality, also I think, it's a chemical. I say the ramp up, to reach the, I think the real supply we call, it's take time. So I think that's on supply side. From the demand side, really, I can tell you because, look at the, the global, I think the carbon, I think, neutrality targets. I think we think at least, I think the compound growth rate should be around 20%. China right now, if you look at the county level distributed generation, it's a very, very, I think, potential market is very, very big. Besides, of course, the U.S. and China, I think the trade war, but I still think, new energy, you see, the renewable energy is the future, is the major tool to reach the global, I think, the carbon neutrality targets. So from, I think, the demand side, really, Gary, you may be the expert, because we really don't know. Some people, the figures fly. Some people said that, the 500 gigawatts maybe by the, 2025. And Mr. Lee, I think from LONGi, he estimated it is maybe even by 2030 is, 1,000 gigawatts. So it's need a lot of, silicon, high quality silicon. It's around like 300,000, it's 3 million, 3 million tons, metric tons. So we're not worried about that. The reason is because we think, we own the largest scale, the world, largest scale capacity in Xinjiang, which is, as soon as we finish, I think, 4B, our capacity may be around, 120 to 130,000 tons. Then we have another new place, we are looking for maybe, by the middle of the 2022, come to, product into trial production. It's around 100,000 tons. Then continue, to add another 100,000 tons. We think we have the competitive edge. So that's our, I think, long-term strategic plan.
Okay, yeah, this is very helpful, and this is all the questions from me. Thank you.
Great, thank you, Gary.
The next question comes from Tony Fai with Bodhi. Please go ahead.
Hi, good evening, management. This is Tony from BOCI. 3 questions from my side. And the first one is still regarding the industry capacity expansion. So just yesterday, the NDRC had a conference to update on the energy consumption status in China, according to which there was 9 provinces in China has been increase in the energy intensity in the first half this year, including Xinjiang, Qinghai, and Ningxia. So we know these 3 provinces host most of the new capacity announced by your peers. So do you think this will slow down their pace in terms of new capacity expansion?
Yes, everybody read that, the NRDC, I think, report. They give 3 level of warning. I think, unfortunately, I think Qinghai, Yunnan, and, Xinjiang, those, I think, have hefty energy supply province, is the first, class, I think, warning. But you have to think about that. China, they have, we put a priority. We think, the polysilicon production line, polysilicon capacity is support, continue the, the solar industry. It's in the first priority, I think. So the government, I think, definitely will put, any new additional adding new energy. I think it will priority put, I think, a solar polysilicon projects as first. So then even existing, I think, the energy consumption, some provinces have to change the structure to reduce, I think, the carbon, the energy, I think, supply, to increase the green energy, I think, supply. So I'm not worried about that because, I think the government is very clear to reach these targets. They need, I think, the solar continue to grow. Definitely, the solar growth need, I think, a polysilicon. Tony?
Okay, great. So my second question is follow up on the silicon powder supply. So you just mentioned the price has gone up a lot recently. So it seems that the smaller producers are troubled by the increasing power tariffs as well as the energy control measures. So of course the current prices won't be a big problem for your margins given the poly prices right now. But longer term, do you think the silicon powder supply will be a bottleneck to the future poly production if China does not allow new build up in the silicon powder supply capacities?
We think this situation right now, I think momentarily, I think the poly powder price go up is the short-term, I think, situation. The reason is because in China, the silicon metal majority produced, I think, in Yunnan province and also Sichuan, Xinjiang. Yunnan province because of the short of water, so a lot of water power plant shut down. So that's why a lot of, I think, the silicon metal, I think, plant, I think, shut down. Second is also the New Hope, I think, for some, accidents, they are closed. I think they are temporarily closed their silicon metal plants. So that's why cost, I think, short-term silicon metal price go up. I think, in the future will go down. Second is we also pay very attention to this situation. To us, we are also looking for, upstream, I think, vertically integrated to, upstream. That means the silicon metal, I think, projects. We are looking for that. Also possible, maybe we go to, investment, one of the 300,000 tons projects in the future, or maybe acquire some existing, I think, plants to maintain, I think, sustainability, the poly powder supply is not just, from, I think, existing supply, like successful, poly powder manufacturers. So basically, we are looking for that. Yes, in the future, definitely we will, I think, also invest in this area. Because 300,000 total investments only like around 3.5 billion. It's the best invest is not too much. Plus, the technology also is not the big deal. I think the silicon metal, the key issue is the stone resources. Second is I think, the electricity, I think, supply.
But do you think the energy quota will be an issue for the powder supply?
I don't think so. The reason is because I think they also in the value chain for the solar industry. Also, I think I think the polymetal basically is not only just provide, I think, the powders for our solar industry, but also provide, I think, silicone. Then also provided to some, the other, iron. See the
aluminum alloy.
Yeah, aluminum iron. Yeah. So it's a lot of usage area. Yeah.
Okay, great. That's good to know. And my last question is on your incentive plan. So we all know that you had a very great incentive plan in place in the past for the US ADRs. Now that you have listed in Asia and moved most of your staff to the Asia entity, so is it fair to guess that in the future you will also have a new incentive plan at the Asia level and reduce your incentives share-based compensation at the US ADR levels?
We think, I think a strong execution team need to, match, I think have, I think incentive, policy. I think this is very important. Our US, I think, the incentive plan, I think, help us to maintain our strong team, together and continue to expansion, have the people to continue expansion. To today, you see, our team, management team, no one leave. Because in China, you know that it's a lot of attractive outside, So I think, for Asia today, we didn't have new, I think, incentive plan. Yes, in the future, we will do that. But look, the valuation is so big, right? It's almost 120 billion. So I think they have called second share plan. We can issue employee at half price of the, half share price of the market price to issue to the employee, the vesting period from 3 years to 5 years. So yes, we were consider, that in the second half of this year.
Okay, great. Thank you very much, Longgen. I'll pass it on.
Great. Thank you, Tony.
Again, if you would like to ask a question, press star then 1 to join the queue. The next question comes from Lu Wang with Bernstein. Please go ahead.
Thank you for taking my questions. This is Lu Wang from Bernstein. I have 2 questions. Firstly, do you have a targeted market share in terms of solar-grade polysilicon by 2024? Secondly, can you please share the progress and future plans of your semiconductor-grade polysilicon production? Thank you.
Thank you, Lu. Basically, if you look our, I think first half of this year, our market share, I think is around, 18% to 20%. I didn't have, actual figure, frank speaking, on the, I think, solar polysilicon side. And in the future, yes, we are continuing to keep 50% capacity, annually, average, growth. But we think, all player maybe, expansion quicker than us. So we think by the year 2024, our capacity can reach 270,000. Our market share can maintain around 18%, So that's our target. Second is, yes, we are starting to do the, I think, semiconductor polysilicon. First project, I think, is 1,500 metric tons. With, I think, that new project, I think, 100,000 tons polysilicon production line together. We have to take in at least 2 to 3 years to make, this production line successful. I mean successful is not only produce the polysilicon, semiconductor polysilicon, but also to, I think, to qualify by the downstream, I think, the user. It takes time, as you know that the semiconductor chips, chips and also the wafers, I think take at least, I think, 2 to 3 years. But in China right now, the good thing is in China right now, the downstream on the semiconductor is very expansion very quickly. So it gives us the opportunity, maybe can shoot the, I think, the qualification period down to maybe 1 to 2 years. Yes, in the future, I cannot, tell you how much market share of, in the future, the, semiconductor side we can take in the market share. But I can tell you right now, the globally, I think around 50,000 tons semiconductor, I think, polysilicon supply. We think, China right now is around, I think, 20,000 tons right now, the usage. We want first to replace the import. That's our first target. Thank you, Lu.
Thank you. And to follow up on the targeted market share, I think one potential problem is that the faster mover and the first mover is probably going to secure the areas or the provinces where they have the cheap electricity and also the energy quota in terms of total energy consumption and energy intensity. So potentially, which makes Daqo left with provinces with higher electricity prices and also some bottleneck in terms of securing this energy quota. Do you think that can be a potential problem? And even if we are, Daqo is able to expand capacity, will that be the case that the new capacity's cost will have to be higher than existing capacity in Xinjiang?
Lu, I think, it's a good question. But if you look at our history, Daqo always, I think it did more than said. And frank speaking, we are very conservative. The reason is because, you see, we started looking for another place. It's not today. I think 2 years ago, like semiconductor, where 3 years ago, we are, 5 years ago, we are starting, collect the technology. For the, I think, a new place, we already starting feasibility study, contact local is more than, I think, 1.5 years. Don't worry about that. I think today, most right now, because I think the governments, local governments put, I think, the solar industry is the first priority, just as I said. From the electricity to the power price right now, as we contact, 4 to 5 places, I think, outside of Xinjiang, most is around 25 cents to 30 cents per kWh. We don't think in the future, I think the power price is the major competitive, I think, key factor. Rather than, I think, the polysilicon quality and the cost control and the scalability, I think is most important. Also the labor, I think the management, So as you can see, our cost structure, our cost, cutting map in the history, also in the future, we are, I think, the number one in the China. So we're not worried about that, frank speaking, So even though some people is already signed some agreements, I think it's not, for example, like Qinghai right now, the price is around 26 cents. Right now, we talk to local governments, they are very welcome us to there. The price is also the same. The only thing is, some stimulation policy may be different, but we, just like we said, we also want to, it's an ESG. We also want to contribute to the society, the government, the governance, local people. So we not want just to taking. So basically, we're not worried about that. The reason is because even today, we all of capacity in Xinjiang, we're shipping to the wafer manufacturing center, for example, like in Mongolia or Yunnan province or Gansu province. The shipping cost almost 2 renminbi yuan per kg. Thinking about that, today polysilicon consume and every consume in Q2, Q1 is around 60 kWh per kg. So it's almost 3 cents, extra. Because we do the shipments from Xinjiang to our wafer producer. So if we can move to, let's say, Inner Mongolia, Yunnan province, so we can save that 3 cents per kWh from the power price, all right, to pay to the local government, local, I think, power grid. So I'm not worried about that.
Thank you. That's really helpful.
The next question comes from Colin Zhang with Daiwa Securities. Please go ahead.
Good evening, management. This is Colin from Daiwa. I got 3 questions. The first one, can you share the cost difference between current P-type and the N-type polysilicon? And do you have any expectations of the potential price difference between the P-type and the N-type polysilicon price, because it's relevant to the ASP for 2023 and beyond?
Colin, I think it's a good question. Basically, right now, I just mentioned that today we're already starting, I think, to provide N-type silicon to our 4 major clients. The only thing is right now, the N-type cell production line in China is not massive. I think it's still, in the research, it's not commercial, a very high commercial, level. So, for example, we provide our major 4 clients is around every month is around 200 tons per total is around 600 to 800, tons per month. So the price is not adding too much. It's around only at 2 renminbi yuan per kg. But today, I think basically we can, from our output, we can, N-type is around 30 to 40%. So if, let's say, in the future, the shift from P to N-type as the, HJT, IBC, TOPCon, the downstream, the N-type, cell production line, popular, we think we can continue to increase N-type, to 70, 80% based on today our technology. So it's not a big issue. The cost, we don't think the cost will add too much. Maybe around renminbi 1 or 2 renminbi per kg. The only thing is the volume, the output, maybe we will go down. The reason is because it takes more time to depository, to put the furnaces. But that will affect the output maybe around 5% to 8%. So it's not big deal to shift for us, today for our knowledge. I'm not talking about other players, to us, because we very digitalized, also AI, calculation on the, furnaces. So it's a very modern, I think, technology. So it's easy for us to ship. Thank you, Colin.
Thank you, Longgen. Very clear. So my second question, we have been adding to the U.S. Entity List for like almost 2 months. I'm just wondering what is the actual inspection from the U.S. customers. So do we have any products which contain the Hershey's silicon powder was actually contained by the U.S. customer? Just wondering if any updates from that.
We didn't have the exact information. Basically, we only can read some information from U.S. I think from some loud researcher. I think basically we see some the module producer right now, some shipments I think in the U.S. customers. I think basically U.S. customers are holding. I think want to see the traceability. To us, I think we are manufacturing. I think polysilicon. Our customer is China, all in China. It's a wafer producer. So we're not adding products, finally shipping outside to, especially to U.S. So yes, currently I think no effects to us. Of course, I think we see the Hershey products maybe export to U.S. maybe holding then also maybe in the future on the module side the module manufacturer have to show the traceability. So I don't think it's a good idea to doing that. The reason is because the impact will to us will be temporary and very limited. But if this issue prolongs, I think the negative impact to the U.S. market will be much bigger than it, I think, to China solar players, because you see approximately 85% of poly and 98% of wafer, I think, are made in China. And currently there is no alternative source, for U.S. To replace. So we believe, I think it is common interest to both U.S. market and Chinese solar producers, I think, to address the issue ASAP, especially to reach the common, I think, interest area. That means the carbon neutrality targets. So I'm not worried about that.
Thank you, Longgen. So lastly, can I confirm one thing? Because I think I heard you mention a bottom line growth of 20 to 25% year-on-year in the long run. So is this a company's official guidance for like at least 20 to 25% year-on-year growth for net profit for 2022, 2023, and beyond?
Okay, I want to emphasize that. We cannot given the future, I think, forecast. The only thing is I say that because we just assume, let's say, next year the capacity we can continue 50% expansion. Okay, as soon as we finish the 4B, I think around 40 to 50,000 metric tons we're adding to the existing, I think, the plants. So I think for next year, I just mentioned that assume the selling price for the first half of this year, next year is around like 150. Second half of next year is around like 130. We believe the bottom line, definitely I think that we can achieve 20 to 25% increase. In the future, we can only do is we will make efforts to continue expansion at the annual average, I think a rate of 50% to expansion the capacity. But we cannot guarantee the bottom line. Really is because I cannot, crystal ball the demand and the supply of polysilicon in the future. Just I mentioned that, you see, we on the supply side have two factors, right? How much real polysilicon we can supply. How much, as if the technology shift from, just like you said, from P to N, how much we can provide the N-type silicon. From demand side, we really don't know the potential market in the future, the growth. So basically, I cannot, answer your question in the future. But yes, we make efforts.
Got it. Very clear. Thank you, Longgen. That's all my question.
This concludes our question and answer session. I'll now turn the conference back over to Kevin He for any closing remarks.
Thank you everyone for participating in today's conference call. Should you have any further questions, just feel free to send us an email or give us a call. Thank you. Bye-bye. Have a nice day.
The conference is now concluded. Thank you for attending today's presentation. You may now disconnect.